Hello my friend, welcome to the program Gyan se Kalyan. We are here to understand the goods and service tax GST with the help of question and answer. So now we are going to understand the basics of the GST. So first question, today we are going to discuss age. What were the major deficiencies of VAT system in India? So my dear friend, we all know there are some big disadvantages of the VAT system. So a new simplified system GST is introduced. So the major deficiencies of the VAT system in India were as under. First point, there was a lack of uniformity in the rates of VAT in different states. Distortion occurs on account of different rates of VAT, composition scheme, exemption, difference in classification of goods, etc. Second major deficiency was central sales tax was not integrated with the state VAT. Therefore, it was difficult to put the purchases from one other states at par with the purchases within the state. Consequently, the advantages of neutrality was confined only for the purchases within the state. Third point, for complying with the VAT provisions, the accounting cost increased, which was not commensurate with the benefit to traders and small firms. Fourth deficiency was VAT was paid at various stages and not at last stage. This had increased the requirement of working capital and the interest burden. As a result of the introduction of VAT, the administrative cost to the states had increased on account of number of dealers going up significantly. So let us start. Second question, what were the taxes which GST subsumed? So answer is GST subsumed the following: central taxes, service tax, central excise duty, additional duties of excise goods and special importance, excise duty levied under the medicinal and toilet preparation excise duty Act 1955, additional duties of excise textile and textile product, additional custom duty, countervailing duty, that is called CVD, a special additional duty of custom, central surcharge and census. And next is the state taxes, which includes state VAT, central tax, central sale tax, entertainment tax not levied by local bodies, luxury tax, tax on lottery, betting and gambling, tax on advertisement, state cesses and surcharge related to supply of goods and services, entry tax not levied by the local bodies. Next one is state surcharge and cesses. So far they relate to supply of goods and services, and last one is the purchase tax. So these all taxes are summed in one tax, that is GST, my dear friend. So welcome my dear friend. Next question, what were highlights of the constitutional 101 amendment act? So now we are going to C. The Constitutional Amendment of 101 highlights the Constitution 101 First Amendment. So, the Constitution 101 First Amendment Act 2016 received the assent of the President on the September 8, 2016. Amendment of Constitution. The bill amend the Constitution to introduce the Goods and Service Tax (GST). Consequently, the GST subsumed various central indirect taxes, including the central excise duty, countervailing duty, service tax. It also subsumed state value added tax, octroi and entry tax, luxury tax, etc. Concurrent power for GST, the bill insert a new article in the Constitution to give the central and state government the concurrent power to make laws on the taxation of goods and services. Integrated GST, that is IGST, only the center may levy and collect GST on the supplies in the course of interstate trade or commerce. The tax collected would be divided between the center and the state in the manner as prescribed by law on the recommendation of the GST Council. So, what is GST Council? The President must constitute a Goods and Service Tax Council within 60 days of this Act coming into force. The GST Council aimed to develop a harmonized national market of goods and services. The GST Council is to consist of the following three members. The first, the Union Finance Minister as chairman. Second, the Union Minister of State in charge of Revenue or Finance. And the third, the Minister in charge of Finance or Taxation or any other nominated by each government. So next very important part of this amendment is functions of the GST Council. Functions of GST Council, these include making recommendation on taxes, cesses and surcharge levied by the entire states and local bodies, which may be subsumed in the GST. Goods and services which may be subjected to or exempted from GST. Model GST law, principles of levy, appointment of IGST and principles that governs the place of supply. The threshold limit of turnover below which goods and services may be exempt from GST. Rates including floor rate with bands of GST, special rates to raise additional resources during natural calamities. A special provision and with respect to Arunachal Pradesh, Jammu and Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh and Uttarakhand, and any other matter, resolution of disputes, the GST Council may decide upon the modality for resolution of dispute arising out of its recommendation. So restriction on imposition of taxes, very important features of the amendment. The Constitution imposes certain restrictions on state on the imposition of tax on the sale or purchase of goods. The bill amends this provision to restrict the imposition of the tax on supply of goods and services and not on sale. Next part is additional tax on supply of goods and additional tax not exceed 1% on the supply of goods in the course of interstate trade or commerce would be levied and collected by the center. Such additional taxes shall be assigned to the states for 2 years or as recommended by the GST Council. Compensation to the states. Parliament may by law provide for compensation to the state for revenue losses arising out of the Implementation of the GST. On the GST Council's recommendation, this would be set up to a this would be up to a 5-year period. Goods exempt. Alcoholic liquor for human consumption is exempted from the purview of GST. Further, the GST Council is to decide when GST would be levied on petroleum crude, high-speed diesel, motor spirit, that is petrol, natural gas, and aviation turbine fuel. So next very important features of the amendment is what is goods and service tax GST and what are the principles of GST. GST is an indirect tax which has replaced many indirect taxes in India. It is destination based tax on consumption of goods and services. It is levied all stages right from manufacture up to final consumption with credit of tax paid at previous stage available as set up. In nutshell, only value addition will be taxed and burden of tax is to be borne by the final consumers. Goods and service tax GST is applicable in India from 1st July 2017. GST is basically based on two principles. Here, very important, my dear, be careful. First principle is destination principle. This principle seeks to tax the goods and services on simple theory that the goods or services should be taxed in the jurisdiction where their consumption takes place rather than the point where their origin of production takes place. Thus, entire revenue relating to goods or services accrues to the jurisdiction where they are being ultimately consumed. Destination principle states that the supply of goods and services would be taxed at the point of consumption. Very good. Destination based tax on consumption means the tax would accrue to be taxed or taxing authority which has jurisdiction over the place of consumption, which is also termed as place of supply. Underline it. Place of supply. Next, very important principle, the value added principle. Under GST, the tax shall be collected on value added to goods or services at each stage of the supply chain, right from the original producer or service provider to the ultimate consumer. GST will be collected on value added at every stage of supply chain. Very nice. Let us see what are the benefits of goods and service tax. Hello, my dear. Goods and service tax law is considered as a major tax policy reform in India as it is simplifying the whole indirect tax procedure by making India a single unified market, thereby minimizing compliances for people at all ends and making tax collection a much simpler process. It also makes it easier for the administration to certify that the taxes have been paid properly and duly collected. For consumers, it ensures benefits through reduction in prices, incentivizing greater consumption by providing set of inputs. Under GST, the taxation burden is divided equitably between manufacturing and service through a lower tax rate by increasing the tax base and minimizing exemptions. GST is levied only at the destination point and not at various points from manufacturing to retail outlet. Some of the benefit of the GST may be enumerated as follows. GST eliminates the cascading effect of tax Under the GST administration, the final tax is paid by the consumer for the goods and services purchased. However, there is an ITC structure in place to ensure that there is no slumping of tax. GST is levied only on the value of the goods and services. Second very important benefit is abolition of multiple layer of taxation. GST integrate different tax lines such as central excise, service tax, sale tax, luxury tax, special additional duty of custom, etc. into one consolidated tax. It prevents multiple tax layers imposed on goods and services. Third very important benefit, regulation of unorganized sector. There are certain industries in India which are still unorganized. The GST provision helped them to streamline the process of online compliance and payment and thereby help in regulation of unorganized sector. Fourth very important, IT infrastructure. The entire process under GST regime, starting from registration to return filing, is online. This is quite advantageous for startup companies who do not have to opt for registration under various indirect tax regime. Lesser compliances in the past, indirect taxes such as VAT, service tax and excise, etc. each require separate return filing and compliances under GST. However, there is just one unified return to be filed. And interesting. Therefore, the number of return to be filed has come down. Next very important benefit, prevent tax evasion. As GST is online tax system, it automatically adds more transparency to the taxation process. Apart from this, manufacturers and service provider are only able to benefit from the input tax credit facility when the input tax and output tax invoices matched. And a good. So last, very important, why dual goods and service tax GST was required. So my dear friend, we all know India is a federal country where both the center and state have been assigned the power to levy and collect taxes through appropriate legislation. Both the level of government have distinct responsibility to perform according to the division of powers prescribed in the constitutions for which they need to raise resources. A dual GST is therefore in keeping with the constitutional requirement of fiscal federalism. The central GST and the state GST would be levied simultaneously on every transaction of supply of goods and services except the exempted goods and services. Goods which are outside the purview of GST and the transactions which are below the prescribed threshold limits. Further, both would be levied on the same price or value, unlike state VAT, which is levied on the value of goods inclusive of same VAT. So next, the last one is which commodity have been kept outside the purview of goods and service tax. Very important. Article 366(12)(a) of the Constitution as amended by 101st Constitution Amendment Act 2006 defines the goods and service tax GST as a tax on supply of goods and services or both, except supply of alcoholic liquor for human consumption. So, alcohol for human consumption is kept out of GST by way of definition of GST in the Constitution. Further, as per Article 279(a) 5 of the Constitution, 5 petroleum products like petroleum crude, motor spirit petrol, high speed diesel, Natural gas and aviation turbine fuel have temporarily been kept out of GST. Council shall decide the date from which they shall be included in the GST. Additionally, though electricity has not been explicitly excluded from GST, but it is considered as nil rated in GST and continues to be charged with pre-GST taxes, that is electricity duty, by state government. Thank you. Let us see next video.